The Blockchain Futurist Conference is Canada's largest crypto-focused conference, and it is returning to the Rebel Entertainment Complex in Toronto next year. The event's new real-life engagement token is designed to facilitate gamification, encourage networking, and improve the conference experience overall. The event's organizers, Untraceable Events, are dedicated to the attendee experience and have included innovative gamification features into every aspect of the conference. Attendees will be able to collect points by completing one or more of over 1,000 unique challenges at the conference. But the optimistic tone of the Blockchain Futurist Conference was completely at odds with what's happening in the market. There was an unsettling mix of optimism and reality at the conference. The crypto market crash has wiped out nearly $2 trillion in value, leaving many retail investors stranded. It has also taken a toll on crypto lenders, with many filing for bankruptcy. The event will bring together dozens of industry leaders, including Ethereum founder Vitalik Buterin. The event will include keynote presentations, immersive experiences, crypto bootcamps, and networking events for attendees. The BFC will be held in Toronto, Canada, from 9 to 11 August, and is expected to draw over 120 speakers. The BFC is set to host several events, including an awards ceremony and an awards dinner. The Blockchain Futurist Conference is being held in Toronto, Canada. The three-day event will feature top industry leaders discussing the impact of blockchain technologies on future industries. Speakers include Vitalik Buterin, Adam Pai, and Christy Harkin from CoinDesk. There will also be panel discussions on the future of cryptocurrency, blockchain, and entrepreneurship. And attendees are free to attend. The collapse of Terra USD has impacted the cryptocurrency space, as it wiped out over $40 billion in investor funds in just 3 days. The collapse of the Terra USD stablecoin is a wake-up call for the industry, according to Perianne Boring, the founder of the Chamber of Digital Commerce and top lobbyist for the crypto industry. Meanwhile, the Association for Digital Asset Markets, ADAM, has announced that it supports the Luma-Skillebrand bill that would regulate stable coins. After falling from its lofty $65 billion price, the UST stablecoin and the Luna cryptocurrency have caused the crypto market to crater. Those who had invested in them hoped that the currency would upend traditional payment systems. However, investors panicked and the project collapsed within days. In the process, a vicious self-enforcing bank run caused massive losses for the investors and pulled down the crypto market as a whole. The failure of the Terra USD stablecoin has impacted the market in Canada, which is a key market for stable coins. In Canada, these assets are not regulated, but Clements hopes that the fall of the Terra USD will prompt observers to set up a regulatory framework. In the meantime, uninitiated investors may have suffered tragic losses, unable to realize the fragility of these currencies. The recent rally in cryptocurrency prices has been largely attributed to Coinbase's partnership with Wall Street giant BlackRock. The firm, which also owns iShares, will provide institutional investors access to trades on the cryptocurrency exchange. The deal is a major boost for Coinbase, which has been hit hard by the collapse in prices and regulatory scrutiny. A key feature of the BlackRock deal is its partnership with Coinbase, which enables institutions to trade Bitcoin through the platform's Prime service. While it is unlikely that BlackRock's new partnership with Coinbase will lead to widespread adoption of cryptocurrencies, it is a positive step for the cryptocurrency space. In a rare move, a major asset manager is entering the crypto space. BlackRock is a leading asset manager and focuses on managing the life cycle of digital assets. However, it seems that institutional clients at BlackRock have been resistant to cryptocurrency, as they have not seen a significant financial return yet. Coinbase's deal with BlackRock is another sign of the firm's growing interest in crypto. BlackRock's new deal with Coinbase is yet another indication that more traditional investors are getting involved in the crypto space. The asset manager is adding another layer of sophistication to its product offering by integrating it with the Aladdin platform, which is the essential plumbing for the global investment industry. While BlackRock's Aladdin integration will likely prove to be the most important news of the week in the crypto space, the deal also highlights how many traditional investors are beginning to get involved with cryptocurrency. BlackRock's new partnership with Coinbase is a sign of the growing interest of institutions in the crypto space. This new partnership is a big step for the industry and could pave the way for other traditional financial institutions to enter the crypto space. Coinbase's prime brokerage and custody services, for instance, will be available for institutional clients of BlackRock. The new partnership is likely to have a positive effect on the price of Bitcoin. After crashing to zero at the end of May, the Terra Protocol's Luna token was subsequently depegged, and the underlying token value plummeted. While Terra's team quickly sold off its reserve Luna, this also led to an increase in Luna supply, which drove down the Luna valuation. Other crypto projects affected by the USD depeg were 3 Arrows Capital, Celsius, and BlockFi. The price of Ether has plummeted 60% since January, and many crypto enthusiasts are hoping that the merge will help revive its price. However, the merge will also bring about Ethereum fractioning, which will make it easier for large companies to invest in Ether and develop Ethereum applications. This news may not be welcome news for investors, but it should be a positive development for Ether. The Ethereum transition to proof of stake and lowered its gas price. The merge may make Ethereum more appealing to emerging economies, but gas fees remain a major challenge to the deflationary value proposition of the coin. While the merge could make Ethereum more widely accessible, many Ethereum users are eagerly awaiting its impact. IndieGG, an India-based gaming guild, is using ANC and Astro tokens to build up its Luna Foundation Guard currency reserve. The biggest news in the crypto space this week is the impending Terra testnet merge. The Terra testnet merge will move away from proof of work and into a proof of stake system. While the switch will make Ethereum's issuance of Ether deflationary, it will not necessarily be a positive one. The switch may cause Ethereum's price to rise, but it will eventually stop rising and crash. The collapse of Terra has revealed the centralized pressure points of its ecosystem. Do Kwon used his power to defend the Terra coin, crushing the entire market. While Do Kwon has not commented on the collapse, his wife is under police protection. He has not tweeted since May 8. If you're not familiar with blockchain, Terra's meteoric rise may seem confusing. Its boosters often hid behind jargon and technical jargon, but the truth is that their efforts were not entirely futile. Their goal is to regain the trust of builders, developers, and investors. In the process, they're going to have to reinvent the entire ecosystem. The Luna Foundation Guard, which controls the Terra ecosystem, acquired over $3 billion in BTC to stabilize the price of Terra. This purchase is a precursor to the launch of a smart contract that will connect the Terra reserve to the blockchain. The smart contract is several weeks away, but the lack of a timeline for the launch could mean that the guards would have to manually step in if USD prices fell below 98 cents. Despite the fact that Bitcoin has suffered a severe fall from its peak in November 2021, investors have been wondering what happened to the $3 billion in crypto reserves that Terra bought to back its failed stablecoin. Terra's founder Do Kwon, who founded the Terra network, said the funds were used to purchase Bitcoin. The Luna Foundation Guard spent the Bitcoin it had in reserve last week to save the failed stablecoin to Roused. The unrest in the stablecoin ecosystem has caused a ripple effect throughout the crypto market. The collapse of Terra reflects a lack of trust in the project. The Terra USD project, with its $60 billion in crypto reserves, was a Ponzi scheme. Its founder Do Kwon posed as a messiah, and the community rallied around him. However, the crypto market is in turmoil as the collapse of Terra's ecosystem has caused many investors to lose millions.